They call it the Mouse House, but Disney's streaming division has finally turned a profit, raking in $336 million last quarter, powered by international growth, price hikes and its ad-supported push. All eyes now on the next big leap, a $30 a month standalone ESPN app with live sports, fantasy and betting, all backed by AI. Meanwhile, Disney's parks are surging right ahead. Massive investments, premium experiences in their war with Comcast and Universal Studios, even as the company prepares to offload its fading linear TV assets to double down on digital. Let's head to Florida. We're joined by Brad Gastworth, who is in Florida, but not at Disney World. Good to see you, sir. Talk to us about this milestone. Obviously, the man behind streaming was Bob Iger. He spoke about how difficult it was going to be, losing the revenues from television as they brought all that cable content onto Disney Plus. Have they turned a corner, or is this a bit of tricky accounting by cutting costs? Because I can't find anything to watch on Disney Plus anymore.
I actually think they turned a corner. I mean, this is a major milestone. When you turn profitable in that digital segment, I mean, we've seen that segment lose significant money for the last several years, and now they turned a profit, which is a big milestone. Ultimately, the strategy is right. Going digital first makes a lot more sense. It is the way of the future. I think most people would argue that. And I think, ultimately now it comes down to, again, on the content side, you make a good point on, what is there. They've been acquiring some assets. They do have ESPN and dropping that standalone app. I think the price point is high, but there's such a big install base of people that love sports, that want sports, and will likely pay that $30 to have it.
Yeah, what do you see as a long-term streaming strategy now for Disney? Is it changing? Obviously, we're seeing sport across our Disney Plus a lot more than we used to. Do you see Disney Plus perhaps getting into local sport and buying the rights for local sport, countries like Australia, across Europe, to make it, I guess, relevant for local audiences?
Yeah, I actually think that would be a great idea. I mean, I'm not sure if that's in their strategy, but for the ESPN app, it certainly would make a tremendous amount of sense to continue adding more assets and more content on the sports side. I think they're going to continue to have more content. That's clear. I think, before it was actually a pretty incredible deal when you looked at, Disney, Hulu, ESPN all combined for $15, which was the rate that most people paid for several years. Now the prices certainly have gone, much higher. I saw my Disney, I think it was like $28 for my Disney per month. So I mean, the prices have really increased, which makes sense why they're profitable. But now, if they're able to really continue to attract the consumer and get that price, why won't they, set off Hulu at a different price? And now ESPN's coming at 30. Maybe they have another one in mind in the future. I mean, these. Right now that some of the parts of all of them are significantly higher than the combined before.
When all is said and done and written about Bob Iger and he finally sails off into the sunset in a one-way boat, as in he can't come back this time, do you think that the 20th Century Fox deal was a good one? Or do you think that that was the albatross around the neck and why Disney Plus took so long to become profitable?
It's a good question, Aaron. The direct answer is I'm not sure. I think that it was probably the noose around the neck, and I think it was partially an issue to get back to higher levels. I mean, this day and age, we need a digital first strategy. That's where we're going now for the company. I think he had to come back in and really, bring the boat back higher. I think we'll find out more as more of the is pulled back, if you will. But ultimately, I mean, he's been really the head of the thing, ahead of the and bringing in the budget over the several years. And when that disappeared and came back, like he brought the strategy back to the company. What happens next into the future? That's a great question. But I think the digital first strategy makes all the sense in the world.
Yeah, it's interesting talking about the future without Bob Iger. Just before we get there, let's talk quickly about the parks because we're seeing a lot of competition there. You've got Universal with Epic Universe there in Florida, but also you've got Netflix entering essentially the theme park land with these big places, these homes, they're calling them, set up around the world. Your thoughts on those?
Yeah, I mean, the theme parks needed some great renovation. They seemed outdated for some time. Disney has spent a tremendous amount updating them to get them to feel a little like 2025. There's still certain parts of the parks that feel very old. That being said, it's a great experience on a global basis where people come and visit. Now, if you look at the pricing for these parks, I mean, the parks are not cheap. And then you bring in Universal as competitor. I mean, Universal is incredibly expensive, like $300 per day per person. I mean, it's really cost prohibitive for a lot of people. I think the park strategy, it'd be strange to see Disney without parks. I think at some point maybe they go that route. Right now, I don't think that's anywhere in their strategy.
We got 20 seconds. Who will replace Bob Iger?
That's a great question. I don't even want to speculate on that. I think that, although I would say that, previously when somebody else came on, it was not taken the stock did not perform that well, and it took him back. I think they need to make the right decision and go somebody who the street expects to keep this thing higher.
Yeah, it's funny. Chapek was the parks guy, which is almost the thing that you need it to work so that the parks work, but it's that person who can come up with a great idea that kicks off the whole ecosystem. Anyway, I reckon it should be you. We'll talk to you soon. Thank you, sir.
Cheers. Take care, Aaron.